Hello and good day. Welcome back to our class. This is teacher Onin Guzman. Our topic for today is the basic concepts of stocks and bonds. This is for grade 11 general mathematics. At the end of this tutorial video, you've been able to illustrate stocks and bonds and distinguish between stocks and bonds. Specifically, we have the definition of terms related to stocks, definition of terms related to bonds, and finally give examples on stocks and bonds. Let us define first the stocks. Stocks are actually the share of ownership in a business or company. So owners of stocks may be considered as a part owners of the company. Also, the stockholders are owners of the firm. Stock valuation is important in order to compare the price of the stocks with respect to the market. Generally, there are two types of stocks. The first one is the common stocks, meaning to say that stockholders receive dividends, while the preferred stocks are actually stockholders receive also dividends, but they are the one to pay first with the dividends. If we talk about bonds, bonds is the debt of the firm. So bond is a certificate which proves that a company or corporation borrowed money from a certain group of individuals or investors for a definite period of time at a fixed rate. Also, bonds are interest-bearing security which promises to pay amount of money on a certain maturity date. It means that the company shows IOU. So to differentiate more on the stocks and bonds, so stocks is actually a form of equity financing or by allowing investors to be part owner of the company, while bonds, a form of debt financing or raising money by borrowing from investors. Also, stocks prices vary every day. These prices are reported in various media. While bonds, investors are guaranteed interest payment and a return of their money on the maturity date. While on stocks, investing in stocks involves some uncertainty. While bonds, uncertainty comes from the ability of the bond issuer to pay the bond holders. Another difference of stocks and bonds, so higher risk but possibility of high returns, while bonds lower risk but lower yield. Again, on the stocks, they are following the higher the risk, the higher the returns. On the other way around, the lower the risk, the lower the return. Next, on stocks, long-term investment is suitable for 10 years or more, while bonds, this is good for short-term investment, such as less than a year. So this is also good for pensioners because pensioners need secured money. Again, let's move on to definition of terms in relation to stocks. So dividend are shares or share in the company's profit, while dividend per share is the ratio of the dividends to the number of shares. While stock market is a place where stocks can be bought or sold, and finally, market value is the current price of the stock at which it can be sold. Another useful term that we will talk about is the stock yield ratio. This is the ratio of the annual dividend per share and the market value per share. This is also known as the current stock yield. So next one is the par value. So this is the per share amount as stated on the company's certificate. Unlike the market value, it is determined by the company and remains stable over time. These are the terms related to bonds. So if you say bonds, so this is the interest-bearing security which promises to pay on two conditions. We have the stated amount of money on the maturity date and the regular interest payment. While we are talking about coupon, so coupon is the periodic interest payment that the bondholder receives during the time between the purchase date and maturity date, usually received semi-annually. So the coupon rate is the rate per coupon payment period, since this is denoted by R, while the price of a bond Okay, the price of a bond at purchase time is denoted by P. So the par value or face value, so that is the amount payable on the maturity date denoted by F. So there are three conditions. If P is equal to F, so meaning to say the bond is purchased at par. Okay? While if P is less than F, so the bond is purchased at a discount. While if P is greater than F, so the bond is purchased at premium. We need to consider also the term or tenor of a bond. Whenever we say this one, so this is the fixed period of time in years at which bond is redeemable as stated in the bond certificate. Number of years from time of purchase to maturity date. And finally, we have the fair price of a bond, meaning to say this is the present value of all cash inflows to the bond holder. Let's try this word problem related to stocks and bonds. So example number one, the Guzman Corporation declared a 30 million dividend for the common stocks. If there's a total of 600,000 shares of common stock, how much is the dividend per share? So we want to find out the given. So the given are the following. So we have the total dividend is 30 million, while the total shares is 600,000. And we want to find out the dividend per share. Now, in order to find the dividend per share, so this is actually the total dividend divided by the total shares. So we will substitute the value of 30 million divided by 600,000. So therefore, we can say that the dividend per share is 50 pesos. Let's have example number two. A certain corporation declared a 3% dividend on stock with a par value of 500 pesos. Ms. Yap owns 200 shares of stock with a par value of 500 pesos. How much is the dividend she received? So let's identify first the given. So the dividend percentage is 3%, the number of shares is 200, while the par value is 500 pesos, and we want to find out the dividend. So again, so the dividend is equal to the dividend percentage times par value times the number of share. So we have, okay, so 3% can be rewritten as 0.03 times 500 times 200. So this is equal to 3,000 pesos. So therefore, the dividend is 3,000 pesos. So let's move on to problem number three. Corporation A with a current value of 56 pesos gave a dividend of 7 pesos per share for its common stock. Corporation B with a current market value of 100 pesos gave a dividend of 20 pesos per share. Use stock yield ratio to measure how much dividends shareholders are getting in relation to the amount invested. So let's have Corporation A. So the given are dividend per share is 7 pesos, while the market value is 56 pesos. And we want to find out the stock yield ratio. So again, so stock yield ratio that is equal to dividend per share all over market value. So stock yield is 7 over 56, or that is equal to 0.125. So therefore, we can say that the stock yield ratio is 0.125 or 12.5%. So let's move on to Corporation B. So the given or dividend per share is 20 pesos. So market value is 100. And we want to find out the stock yield ratio. Again, so the stock yield ratio is equal to dividend per share all over market value. So we have the stock yield ratio that is equal to 20 over 100 or 0.2. So therefore, the stock yield ratio is 0.2 or 20%. So for us to have a clearer idea for the Corporation A and Corporation B, so we have the Corporation A, the stock yield ratio is 12.5%, while Corporation B, the stock yield ratio is 20%. So as we can see on the table, so Corporation B has higher stock yield ratio than Corporation A. Thus, each peso will earn you more if you invest in Corporation B than A. If all things are equal, then it is wiser to invest in Corporation B. Let's move on to problem number four. Determine The amount of the semi-annual coupon for a bond with a face value of 300,000 pesos that pays 10% payable semi-annually for its coupon. So first, let's identify the given. So the given are the following. The face value is 300,000. The coupon rate or is equal to 10%. And we want to find out the amount of the semi-annual coupon. So take note that the amount of the semi-annual coupon is 300,000 pesos. That is the face value times the rate times 1 half. Why 1 half? Because this is semi-annual, meaning to say that is half a year. So 300,000 times 10% times 1 half, this is equal to 15,000 pesos. So the amount of the semi-annual coupon is 15,000 pesos. Therefore, so the amount of the semi-annual coupon is 15,000 pesos. So let's move on to problem number 5. Miss Marie Francisco bought 51,000 pesos ACTS bonds at 103. What is her total investment in ACTS bonds? So first, let's identify the market price of one bond is actually 1.03. Why 1.03? So take note that we have 103 here. It means that, okay, it is more than 100. So if we will divide 103 by 100, we will come up with 1.03 times 1,000 pesos because we have 1,000 pesos worth of this bond. So this is equal to 1,030 pesos. So this is the market price of one bond. Now, the total investment is we have 50, okay, bonds. So that is 1,030 times 50. So this is equal to 51,500 pesos. So, therefore, the total amount invested is 51,500 pesos. Okay, take note that when the bonds are bought and sold through a broker, the broker charges a broker's commissions or brokerage fee. Hence, the amount of investment becomes the market price of the bonds plus the broker's commission. So let's consider this problem number 6. Mrs. Dimagiba owns 45 bonds with a par value of 1,000 pesos each and pays 8.5% interest. What annual income does Mrs. Dimagiba get from these bonds? First, let's identify the given. Take note that the number of bonds is 45, while the par value is 1,000, and the rate is 8.5%. We want to find out the rate of income or the yield. Now, to compute that, so the par value of 45 is 45 times 1,000 pesos. That is equal to 45,000 pesos. So the annual income that is equal to par value of number of bonds times rate times time. So we have actually 45,000 pesos times, okay, this is the equivalent of 8.5% or 0.085 times 1 year. So therefore, we can say that we have the total of 3,825. So the annual income for 1 year is 3,825 pesos. Let's move on to problem number 7. So find the yield of 1,000 pesos, 9% tri-bond price at 94 plus 10% commission. So first, we want to identify the given. So the given are the following. The par value is 1,000 pesos. The commission is 10, okay, pesos. And the rate is 9% and we want to find out the rate of income or what we call yield. So let's have our step number 1. So we have the annual income. So we have 1,000 times the rate times 1 year. So that is 1,000 pesos times 9% or 0.09 times 1 is equal to 90. Next, so the amount invested is actually market price plus the commission. So we have the market price of 0.94 because that is 94 plus commission. So we have 0.94, meaning to say 94 out of 100. So that is why we have 0.94 times 1,000 plus 10 pesos. So we have 940 plus 10 This is equal to 950 pesos. So this is the amount invested. The next step that we will do is we would like to find out the yield or the rate of income. Take note that the rate of income is the same as the annual income divided by the annual interest. So we have here the annual income is 90 divided by our annual interest is 950. So this is equal to 0.0947, or this is equal to 9.47%. So, therefore, the yield of the investment is 9.47%, or the Triban Corporation bond yield at 9.47%. Let's move on to market indices for stocks and bonds. So a stock index or stock market index is the measure of the value of a section of the stock market and is computed from the price of selected stocks. So investors and financial managers use this to describe the market and compare the return on a specific investment. So let's move on to market indices for stocks and bonds. So as we can glean on the table, so we have the index, the value, the change, and the percent change. So again, so the value is the value of the index, that is BAR. So let's say we have the PSEI. So that is the Philippine Stock Exchange Index. So the value is 7,523.93. So there is a change of 16.60. So the change is the change of the index value from the previous day. So anyway, if this means okay, green color, it means there is a positive change. And the percent change is the ratio of the change of the index to value. So we have 0.24% change. However, if we will look on the financials, so we have the value of 1,454.39. So there is a decrease of 38.87. It means there is a decrease of 2.6%. The next thing that we will consider is what we call the stock tables. Okay, so the 52-week high-low is actually the highest lowest selling price of the stock in the past 52 weeks. So observe, so if we have here the stock AA, so we have here the highest is 94 while the lowest is 44. While the stock BBB has the highest of 88 while the lowest is 25. So again, so high-low, that is the highest lowest selling price of the stock in the last trading day. Observe, so AA has 60 as the highest, while the lowest is 35.5. While for BB, we have 45 and the lowest is 32.7. Next, the stock is the three-letter symbol of the company is using for trading. The next thing that we have on stock tables is the volume by 100. So meaning to say the number of shares in 100 traded in the last trading day. So this is in the case, stock 100 AAA sold 2,050 shares of 100, which is equal to 20,500 shares. So the next one is the closing price of the last trading day. So observe that for AAA we have 57.29, while for BBB is 45.70. Next, net change. So the net change between the last or the two last trading days, in the case of AAA, so the net change is 0.10. So the closing price the day before the last trading day is 57.29 minus 0.10. So this is 57.19. Next thing that we will consider for the index for buying or selling stocks is we have this table. So let's have what we call the bid size. So observe that on the bid size, this is the number of individual buy orders and the total number of shares that wish to buy. While the bid price is the price buyer are willing to pay for the stocks. Say for instance, in here, in this first row, we have 122 who are bidding for the size. Okay, and the price is 25.60. While for those who are selling, okay, there's only one who is willing to sell, okay, the price of 21.6 of 20,000 shares. Okay. The next one is the what we call the ask price. So the price the sellers of the stocks are willing to sell to the stocks. And we have also the ask size. This is how many individual sell orders have been placed in the online platform and the total number of shares these sellers wish to sell. And finally, for our bond market indices, we can say that the bond index or bond market index is a method of measuring the value of the section of the bond market. The main platform for bonds or fixed income securities in the Philippines is the Philippine Dealing and Exchange Corporation or PDEX. So that ends our discussion on the basic concepts of the stocks. Again, this is Teacher Onedi Guzman. Thank you. Do not forget to subscribe to my channel so that you will be notified about my new videos. Thank you.